welcome to ET Now Startup Central, India's first and only daily show focused on news that's of interest to startups and entrepreneurs. I'm Chandra Shrikant, joining you live from India's startup capital, Bangalore. And here goes the top headlines on ET Now Startup Central. We kick it off then with the new appointment at social networking giant Facebook. Facebook India has a new MD, and that's Umang Bedi, who takes over from Karthik Reddy. Bedi was previously the South Asian Managing Director for Adobe. Payment banks may be losing sheen with a lot of licensees returning it, but RBI Governor Raghuram Rajan is unfazed. He says that he's really not perturbed by people returning payment bank licenses. Our special FinTech focus then, where we tell you about the key takeaways from NASSCOM and KPMG's FinTech report. We also have voices from Kotak and Blume Ventures to really tell you about how Digital India will shape the future of finance. In keeping with the FinTech theme, we bring you our budding star today, Faircent, a player in the P2P lending space. Finally, startups may be withdrawing offers, but good news for engineers because Salesforce is hiring big time. They will add 1,000 people at their newly launched campus in Hyderabad. And let's go to the top story, where we are telling you about the senior management change at social networking giant Facebook. Facebook has announced that Umang Bedi will take charge as Managing Director of India operations. He replaces Karthik Reddy, who, remember, stepped down at the height of the Free Basics issue. In fact, just days after Free Basics was banned by TRAI. Now, interestingly, Bedi's appointment comes just when the net neutrality issue is again rearing its head, because remember, the telecom regulator TRAI has issued yet another consultation paper on the subject. He's invited views from the community. This is, of course, an issue that startups also identify closely with. It will be interesting to see what Bedi's own game plan will be going forward. But even from a business point of view, India is increasingly becoming very important for Facebook. Huge smartphone penetration here, a lot of traction that they are seeing on the advertising front, because they have gone on record to say that they work with nearly 85% of the top 100 advertisers in India, and video is going to only increase that push. As for Karthik Reddy, like she has been saying, she's not quitting Facebook. She will be relocating to their global headquarters at Menlo Park and take on a global role in their accounts team, where she will be working with the advertisers on Facebook. So that's the big management change there. And Umang Bedi also comes with a lot of pedigree. He was previously the South Asia head of operations for Adobe. Moving on from that story then to our FinTech focus today, and interestingly, on a day when the RBI unveiled its credit policy, a lot happening in the FinTech space, and we kick it off with RBI Governor Raghuram Rajan himself, who seems pretty unfazed by the list of applicants who seem to have returned payment bank licenses in recent months. I mean, be it Murugappa Group, Kotak Mahindra, and also the consortium led by Dilip Shangvi, they have returned licenses for payment banks. This, of course, could work to the advantage of the likes of a Paytm or even telecom operators. But these players whom we've been speaking to who've returned licenses really cited the high cost of customer acquisition involved, where they will really not be able to match the kind of spend that a Paytm will bring to the table. Another factor, of course, is the profitability, which is going to take many years. But let's listen to what RBI Governor Raghuram Rajan had to say on this subject.
We gave out licenses to anybody we thought had the appropriate qualifications to run a payment bank. Now, we presume they did they also analyzed potential business prospects. Now, after doing further analysis and seeing the other players who are coming in, some of them have decided to back out. My sense is that the payment bank works particularly well for those who already have a base of operations and many contact points, and therefore can build upon that. And the classic example is somebody affiliated with a mobile company with many kiosks through which you can do cash in, cash out. So the first license is already with Airtel, and I would presume other mobile operators would also go the full length. We are not overly perturbed that some people decided after analysis that they would not go forward. In fact, it suggests that the licensing has been adequately liberal and that we have a variety of players coming in. I think that is as it should be, that people will decide whether they should come in or not. Now, I think Mundra Saab has made this point that people should also acknowledge the fact that it imposed some costs on the assessee, or the assessor, I should say, to go through these applications. We ask for a lot of information from a variety of government agencies. So going forward, we have to find some way that people devote adequate time to understanding whether in fact they should apply or not. The days where licenses were rationed and therefore you had to get in the license because otherwise you wouldn't get it down the line, we hope is in the past. Therefore, when you go forward, do a proper assessment. Don't just go for a license because it's a valuable property to have, but instead do the due diligence on your own, and when you apply, it should be with the intent of fully carrying out. Again, that said, we're not overly perturbed that some people decided to back out.
With that, we come to our fintech-focused segment, and NASSCOM released a report with KPMG to really highlight the way fintech industry is shaping up in India, the size and scope of the same. We've really narrowed down some numbers for you. Let me just take you through some of them. So according to this report by NASSCOM and KPMG, the Indian fintech software market will reach $2.4 billion by 2020 from $1.2 billion currently, and the transaction value for the same will touch $73 billion by 2020 from $33 billion now. Some of the key drivers for this, of course, is going to be e-commerce, smartphone search, which is driving a lot of fintech. And as far as funding is concerned, the space is only getting a lot of interest day by day. I mean, even if you look at 2015 within Bangalore, you saw 11 fintech startups getting funded by VCs, and that trend is only going to go up. They've also highlighted some of the key themes that's really going to take shape as far as fintech is concerned. Some of these, of course, include next generation payments, which of course will be driven by UPI. The other themes flashing on your screen include the likes of peer-to-peer lending. We in fact have a startup in that space on the show today. Blockchain, bank in a box, Aadhaar, and biometrics and security. Those are really going to be some of the key themes to track as far as fintech is concerned. But in keeping with fintech, we have a big voice from a traditional bank, and we're talking about Kotak Mahindra Bank's Shanti Ekambaram, who really spoke to us about how Kotak will tap into the fintech opportunity. She also spoke about how they are currently working with startups in the space. Let's listen in.
Banks are the biggest payment ecosystem. All banks today have apps, right? And that's as good as a wallet in terms of making payments. So what's happening is fintechs are trying to put innovation and technology to come up with solutions, and they are agile and fast going. banks are revamping themselves, to look at how they can provide customer experience on the whole mobile, which is what the main form factor is. At the same time, how can they partner with the fintech industry, collaborate to look at how do you digitize end-to-end processes, put out some APIs to see what are the new. So banks actually are turning incubators with the technology firms to see how can we work together. So if you look at the whole space, there are a zillion startups, more than 10,000 as I understand, or 12,000 startups. There's a lot of investment flowing in. But the ecosystem is getting very interesting because as between the government, which wants to push a cashless economy, which wants to push financial inclusion, regulators who are willing to be supporting, investors who are willing to put money, and banks and financial services who are saying, okay, let's see how we can partner to make this whole ecosystem thing.
What is Kotak's plan as far as engaging with that ecosystem of fintech startups?
Firstly, just with this NASSCOM 10,000, we've been partnering for the last 2 years. So we have run what we call the Appathon, where we call a lot of the mobile app developers to see how can you work with banks. Then we had the Hackathon, which is again involve a lot of developers. We also have set up an innovation lab in Bangalore where we work with the startup ecosystems. So our whole approach, and this was more than 2 years old, so this is not yesterday, has been how can we work with this ecosystem to get ideas that can help scale, because we've got the customers, we've got the base, they've got the ideas, and they've got the speed to market. How do you match and marry this? So we've been working with this whole ecosystem, and a number of ideas that we have thought, we have implemented, including in some of our products and services, has been partnering. So we believe that this is an ecosystem that we need to partner. We have worked, nurtured them, and going forward, we will see how further we can partner them.
All right. Also, what else is would you look to do, as far as expanding your own presence goes, in terms of payments bank, et cetera, because we've seen Paytm get a payments bank license, online fintech players. How would you chart your course going forward in that respect?
I've already talked about the what we do in the fintech space and how I see BFSI and fintech going, right? As far as the payment banks are concerned, in fact, banks can work with all the payment banks because payment banks can take deposits only up to 1 lakh. They can't lend. So, and they will have a base of customers. How can banks help distribute, lend, and do a collaborative ecosystem as far as that is concerned? At Kotak, we have a small investment in one of the payment banks, and we will see how the whole space evolves. I think what is important is, as between the payment banks and the small finance banks that are coming in, one would see the mass market open up.
From a banker's perspective to a VC's perspective then, where we get you Blume Ventures' Karthik Reddy on their own view as far as the fintech space is concerned, the kind of investments they will make in the space going forward.
Within lending, within insurance, within payments, within consumer payments, leveraging the new infrastructural elements like UPI, UID. So all of these elements I don't think have come together fully yet. And that's the opportunity for us. So between Bitcoin, between student lending, between integrating offline insurance into online, and Chiller, which is a peer-to-peer payments mechanism leveraging which will leverage UPI, but already leverages the IMPS mechanism. We have already 4 bets in this fund.
How do you see the space evolving going forward? What kind of startups do you think will be the ones gaining momentum?
So payments, I think, is important because old cash-based payment mechanisms were kind of broken and dated. You need to digitize. And fundamentally, the digitization platforms are very archaic, very painful. And the first generation of them are there, and they're doing a great job, whether that's BillDesk, whether it's Paytm. I think the next generation is evolving. That's where we think the Chillers of the world and other guys will compete for that business. So payments is one element. So it allows me to collect, pay. Beyond that, its utility value is limited. And so there will be 2-3 big layers, and each one of them will have 1 or 2 dominant players, and I think that's where that market will settle.
Full stack fintech companies who are already on their way, that are existing in the market at this point in time that you would say are doing well for themselves?
We hear good numbers around growth around things like capital floats. To some extent, they're the ones who are a little bit of a leader in that SMB space. I think we are seeing innovation after a good 5-7 years in the microfinance space. I won't be surprised if some of them leverage onto the fintech platforms and build a wider base of lending. We're seeing some of them dabble with it. I don't know specific names because we don't invest typically in microfinance. But these lines are blurring. So effectively, you have businesses which were good at fundamentally enabling savings, fundamentally enabling payments, fundamentally enabling lending. And now which is a question I actually have for Shanti at Kotak today, for example. Would the old banks see these as opportunities and acquire some of these businesses? Because it's wide open, in my opinion, like how e-commerce was for retail, to be saying there's nobody with such a wide lead that I can't go and build this myself. And if you can't, then go buy, right? And so I do expect the financial sector to be a little bit more progressive on this front.
And in keeping with the fintech theme, we also have a budding star in the fintech space. You know, we highlighted peer-to-peer lending as one of the key themes that will drive fintech this year. And one of the players in that space is Faircent. Let's hear out Faircent's co-founder and CEO Rajat Gandhi on the opportunities that they see as far as the P2P lending space is concerned.
Peer-to-peer lending is the next level of fintech. This is over the layer of the payments and everything, where you really disintermediate the banking system which is there, wherein you disrupt it and disintermediate it. And because we are able to connect individual lenders and borrowers. So our company, what it does is aggregates lenders and aggregate borrowers and connects them directly to take a loan. So you don't need a bank to take a loan from Faircent. So you could giving me a loan and I could be paying it back. What we do is we remove the great margins which typically banks make in between, the spread, and we pass it back to both the customers, whether it's the lender or the borrower.
All right. And what kind of lenders do you have as aggregated? From what I understand, about 6,000 lenders is what you have in your portal.
Yeah, so we have over 6,000 lenders. They are primarily people like you and me who work in organizations. Then we have a lot of people who are self-employed, who have small traders and all that, who really have some surplus money, somebody into trade, somebody is running a shop or a consultancy service. They are typically putting money out here and earning yields of upward of nearly 18-20%.
All right. Also, you've just got a brand new investor in the form of JM Financial Services, who have picked up a near 10% stake in Fair Assets, your holding company. Talk to us about that investment.
Yeah, so it's a pure financial investment. It's not a strategic investment as of now. And I think they understand finance. That's where they came in. And we are doing something very innovative on that. So I think Vishal and team are great guys to have on board. Before that, we had Mohandas Pai as our investor. He still contributed to this round also. So we have got some of the best guys in the industry backing us up.
All right. Talk to us about the RBI discussion paper which has come out as far as P2P lending portals are concerned. They've said that they have to register as the NBFCs. Are you registered as an NBFC? What is your plan as far as sticking to regulatory concerns are concerned?
Look, we are a private limited company right now. If the RBI asks us to become an NBFC, that's fine. But we are very happy the way RBI has gone about the thing. I think they have been very proactive. They are actually leading the innovation rather than following it. I think this is a great change. We were part of the Startup India, Stand Up India initiative of the government. And I think this is just falling through, coming into place. With actually the various departments and the various institutions really backing it back with such policy and initiatives.
Now, in the last few weeks, a lot of negative news around, delayed joining dates and startups, but finally some good news on the hiring front because Salesforce, cloud services provider, has opened a new center of excellence in Hyderabad, and they also plan to add 1,000 people there over the next few years. So I guess if you're looking for a job at this point, this may come as good news for you. Let's listen into Salesforce's Senior Vice President Atul Nanda on their plans for Hyderabad and also how they plan to engage with the startup ecosystem, especially those in the cloud and enterprise space.
Salesforce is going to significantly expand our presence in India. We're going to be opening a new Center of Excellence in Hyderabad, located in the Divyashree Orion Tech Business Park. We plan to add over 1,000 jobs by the year 2020, tapping into the region's great technical talent. We plan to expand our team to enterprise software engineers as well as customer success professionals. We've had success in our existing centers in India as well, and so we just feel like it's time to double down. Our focus right now is on building out this new center of excellence. We also, I should have mentioned earlier, but I didn't talk about this, is, Salesforce as a company, we believe very, very strongly in giving back to the community. So part of our plan here is to commit 10,000 total employee hours, volunteer hours back to the community.
Our final segment of the day then, Number Crunch, and the number we are highlighting for you today is $3 billion. That's reportedly the bid that Verizon is placing for Yahoo's internet businesses. That's according to a report by the Wall Street Journal. If you think that's huge, it's not really, because in the previous round, the bids ranged anywhere between $4 to $8 billion. And of course, who can forget 2008 when Microsoft was looking to make a hostile bid for Yahoo for a whopping $45 billion. Perhaps that would have been attractive, but I guess hindsight is always 20/20. This is a deal that's going to keep everyone in Silicon Valley occupied in the next few months to come, and we will get you all the action right here on ET Now Startup Central. With that, we come to the end of the show today. Thanks so much for watching, and keep it with ET Now, because up next is Market Watch.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.